Hi, I'm Mike Santolo, editor of Cabot Market Letter and Cabot Top 10 Report, and I'm here with your Cabot Weekly Review. The good news this week is one of our key market timing indicators did turn positive, telling us the intermediate term trend is turning up. That's a good reason to do some buying and see how things go in the future. Let's take a look here at the S&P 500 chart. It broke down through its 50-day moving average. That's this thin black line here in early May, and really since then we've been pretty defensive. A little bit of buying here and there, but really defensive. But just this week, you'll notice that the S&P, along with just about every other major index, got above this lower moving average. This red line is the 25-day moving average, and that moving average has started to trend up. Now, I know that doesn't seem like much on this chart, but by our measures, that means the trend is turning up, and it's worth doing some buying. It's a pretty reliable indicator. There's nothing that says the market can't fail right here. But by staying on the right side of the trend, you're guaranteed never to miss out on a major up move, and you're guaranteed never to stay invested during a major down move or even a 2.5 month painful correction like we've had recently. So the bottom line is go gradually. Buy a couple of stocks. If you start to make money, buy a couple more. If you get through earnings season, you can buy a couple more. And there's no predicting, there's no forecasting, it's nothing about economics. You're just following the market. You're following some prudent portfolio management, not taking too much risk, but not being too cautious either. Just walking that middle road. And if things work out, it won't take long to get heavily invested. Now the question is, what stocks do you buy? Well, I've talked about ways to find stocks, like finding stocks hitting higher lows, I should say, as the market was hitting lower lows. That is still a good method to look for. But here's some other things. Obviously, new highs. This doesn't take a genius to figure out. Here's PowerOne, PWER, lower priced, a little bit more speculative, but you can see the stock, nice consolidation during the market's correction, volatile, definitely volatile, but good volume here as it ramped up to new highs, and it's holding its ground so far. So obviously that's something to watch. Stock setting up. Here's Baidu. This looks a lot like PowerOne did before it broke out. It's had this consolidation. Obviously, this is a different animal. It's much more liquid. It's really still one of the leading stocks in the market. Has earnings next week. So my thought is if this can really blow above 78 on big volume, that could be a sign that, a new up leg is beginning. If you wanted to buy a little bit in this range, that's fine. But, waiting for the breakout to really put on a bigger position, it's usually a little bit safer even though you're buying at higher prices, okay, especially with earnings coming out next week. Okay, another thing to look for, obviously, volume clues. Now here's VMware. This looks great anyway. It's moved up to new highs. But if you can come down here just on the volume section, when the stock bottomed out a week and a half ago, a couple weeks ago, there's some good volume. And then a couple days later, it burst about 7% on its biggest volume in 4 or 5 weeks. And then just the other day, it hit new highs on above average volume. This isn't, anything revolutionary. It's just telling you that institutions are active. And when the institutions are active, they tend to stay active. They don't just buy some and then go away. Now, there's nothing that says the VMware can't report bad earnings and fail or whatever. But for the most part, when institutions are in there, it just tells you the next pullback is probably going to be supported by people who are buying it in here. They probably didn't get their whole position on, and they'd like to buy some more if it can get back down to 70 or whatnot. So that's certainly one to keep an eye on. Salesforce.com is a good example of, while there hasn't been any volume, it's a big liquid stock. It's a good example of many days up in a row. I think this is 10 or 11 days up in a row now. When you start seeing 8, 9, 10 days up in a row, even if the volume's been somewhat lackluster, if you're talking about a big liquid stock, it's just a sign that there's a dearth of supply, number one, and there's some persistent accumulation. In our experience, any normal pullback here is buyable. Obviously, you got to keep your stops in, probably around the 50-day moving average. But, any pullback here is buyable. Maybe it just blows out the top above 100. We'll see how it goes. But the bottom line is search for stocks, especially now with the market just kicking off, hopefully a new uptrend. Search for stocks that are up 8, 9, 10 days in a row. They can be, point you to some new leadership. Last but not least is tightness, both in price tightness and then volume dry-ups. This is Dr. Reddys Labs. It's a little thinner, okay, but it's a generic drug maker. But notice how it did hold up well during the correction. It formed this base. It actually broke out in early June. And now it's constructed this base on top of a base. And now just notice how it's very quiet here. Volume's been drying up. The stock itself hasn't been doing much. And that just tells you that there's no more supply out there. Again, there's no guarantees in the world. But if somebody comes tomorrow or the next week and wants to buy 100,000 shares, guess what? They're going to have to pay up for it. And that's what usually causes those sharp spikes in stocks. Okay? So something like in this situation, let me clean up the chart for you. You can buy a little bit here and then maybe buy some more if it breaks out above some resistance levels. That's usually the safest bet. You could also just wait for the breakout. That's also a pretty good bet, especially with earnings coming out. I believe this is next Thursday. But the point is searching for stocks that are generally strong, but are tightening up and are not in the public's eye, volumes drying up. Those can actually be your highest probability investments if you're able to spot them. Well, that's all the time I have for today. Thanks for being here. And be sure to come by again next week for another Cabot Weekly Review.